don't believe the BRICS feel as though they're in any urgency to get their various options out there and to get their channels fully ramped up, because they see a Treasury bond default, because they see a government debt. The United States, it's gone out of control. So there's going to be a lot of gold demand. And as you get the gold demand for higher prices, it's going to create fever. And I think the Eastern nations know that we're going over 3,000 for gold, a lot better than the Western nations do. Therefore, they're going to...
I absolutely knew that the system died in 2008, but they didn't have the new system in place. Mm-hmm. I don't think it was a coincidence that Bitcoin came out in January of 2009 when quantitative easing came out in March of 2009. Because look at how much money would have gone into physical gold had that not happened. And the other thing is, in my opinion, and I know there's going to be a lot of people that disagree with me, but it's a Trojan horse.
6,000 ounces a day at current prices. It's a 600% increase in what they were doing. And when you put that in context to what we are seeing coming off of the exchanges, it's part and parcel with what I've been screaming over and over and over again. Yeah, I say the same stuff. I do. But it keeps happening, and it keeps happening, and it keeps happening. And if you don't pay attention, you miss it.
As possible for maintaining sanity, and when there's just too much on the plate. I'll be honest with you, I'm trying to learn what mBridge is. I believe it's some form of payment system involving gold. Okay, here's my simplistic perception. The BRICS are in absolutely no hurry to install other non-dollar options. They're in no hurry at all. They can rely on the Chinese yuan because China said on a temporary basis you can do that. In Eastern Europe, they're using more and more ruble for settlement. With India, Russia has a problem. India wants to use the rupee. Russia's saying, we'd rather you not pay us in rupee. And Russia would prefer the Gulf region types like the dirham out of UAE, United Arab Emirates. India is pushing back on that. We have now the blockchain that is being built out as a platform. That opens the door to XRP. Its on-demand liquidity makes it a great candidate. I don't believe the BRICS feel as though they're in any urgency to get their various options out there and to get their channels fully ramped up, because they see a Treasury bond default, because they see a government debt for the United States that's gone out of control. So there's going to be a lot of gold demand. And as you get the gold demand for higher prices, it's going to create fever. And I think the Eastern nations know that we're going over 3,000 for gold, a lot better than the Western nations do. Therefore, they're going to continue with their gold load, increasing their gold reserves to make available usage of the gold token. The gold token requires the parties to have adequate gold reserves behind the token. You can't just say, well, we're going to use the gold token. Well, do you have the gold behind the token? That's what they're doing now. It's going to be Russia, China, Persia, and Saudi providing the gold. And China will be more the dynasties than it will be the government. The government is, I tell you, the government, they're coming out with all this information about the People's Bank of China and all their increases in gold. Oh my gosh, they're buying probably 10 times that off the book. They're setting the stage for the Rothschild central banks to load up on gold quietly and secretly. And then once we get near 3,000, they're going to push it to 3,000 flat, 5,000 then in the following, who knows, several weeks. And in the following months, 10,000. And miraculously, the Rothschild central banks will work their way out of insolvency. And to do that, they need a lot of gold. You don't just buy, 20 tons of gold and, oh my gosh, we're out of insolvency. because the price went up fourfold. That's nonsense. They got to buy a lot of gold, and they will not be selling it. Those people who think, my gosh, there's so much gold out there, it's going to go down in price. I say there are a lot of televisions out there, and they're not for sale, and the price is not going down. There are a lot of shoes out there. They're not for sale. The price of shoes is not going down. It's one of the dumbest arguments I've ever heard from smart people.
The BRICS nations, Brazil, Russia, India, China, and South Africa, are strategically accumulating gold reserves. This move is possibly aimed at backing a new trade currency in anticipation of a potential financial crisis and a U.S. Treasury bond default. China and Russia, along with India and Turkey, have significantly increased their gold reserves since 2010, with substantial purchases continuing into 2023. Analysts speculate that the BRICS nations may be preparing to implement a gold-backed trade currency. This reflects a cautious approach amid advancements in blockchain and cryptocurrency technologies. Despite their ongoing efforts, the BRICS nations do not feel an urgent need to fully implement alternative payment systems. They are temporarily relying on the Chinese yuan and other regional currencies for trade. Jim Willie predicts a significant rise in gold prices, potentially exceeding $3,000. This is driven by increasing demand from Eastern nations and central banks' accumulation strategies. The United States faces an inflationary depression, with economic indicators diverging from official reports. Rising inflation rates and government debt exacerbate the situation, leading to concerns about the country's financial stability. Central banks are bolstering their gold reserves to prepare for potential financial crises, with significant buying by Rothschild central banks anticipated to drive gold prices even higher. Large insolvent banks face challenges with depleted inventories and significant losses on Treasury bonds, pushing them towards gold as a safe haven asset.
Do is convert that Apple stock into fiat money. That's all you can do with it. It is used in one area of the economy. So when demand for these go away, what do you got? But physical gold and physical silver are used in every single sector of the global economy.
Yeah.
They have the broadest base of functionality. This is every single sector of the global economy. This is a bazooka. This is this.
Yeah.
And when you're going into a knife fight, do you want to pen the central banks, or are you looking at a government? Can anybody actually look themselves in the eyes or look anybody else in the eyes and say, this entity has my best interest at heart and my children's best interest at heart? No, it used to be that the individual was at the top of the food chain, and then the states, the Constitution, right? That old relic. Then the states were there to support the rights of the individual. And then the federal government was there to support the states who were supposed to support the rights of the individual. That's flip-flopped, right? Now, how long do we have to work to pay our taxes? And where's that money going? Because quite honestly, it's so easy to spend someone else's money, isn't it? Yeah. I absolutely knew that the system died in 2008, but they didn't have the new system in place. Mm-hmm. I don't think it was a coincidence that Bitcoin came out in January of 2009 when quantitative easing came out in March of 2009. Because look at how much money would have gone into physical gold had that not happened. And the other thing is, in my opinion, and I know there's going to be a lot of people that disagree with me, but it's a Trojan horse, because there are, to your point earlier, thousands of instances. These are just a few of the currencies. There's over 4,800 currencies that do not exist anymore. And the way they make that transition, read their documentation. They tell you, we know how to do this. We just keep things looking as normal as possible so that people don't realize that anything has changed. And you know, I do happen to have in here, because I ordered them in, a $20 bill. What's the date on this one? 1977, and a $20 bill from 1969. Look at, freaking look, exact thing.
Yeah.
They were completely different. 69 still had at least a quasi gold backing. Mm-hmm. And I remember, I'm old enough to remember Nixon saying, oh, if you just buy American, don't worry about it because we're not going to experience inflation. What is their job? To lie.
Yeah.
To lie and lie and lie. And you should have a box with Janet Yellen in there with earplugs because that woman is tone deaf. You know, I did a little thing once because it's more eye-opening. So I've been using this a lot more. If I'm talking about a topic and then I'm going all the way back and showing that in the beginning in terms of dollars, in terms of gold, in terms of silver, right? Mm-hmm. And then you bring it forward. And there hasn't been one case, not one case where the dollar has lost lots of purchase, like your income. Let's just go to 1971 when we completely went off the gold standard. The average wage was $10,500 at that time. I don't have this in front of me, so I'm going to be off a little bit. But had you been paid in gold at that time at $35 an ounce, or even go to $42.22 because that's what they reset it to when they went off the gold standard, you would have been paid with something like 271 ounces of gold. Yeah. If you never got a raise, the average income is now something like, I think, $63,000 a year. So you would sit there and go, well, I would much rather have 63,000 than 10,500, except that the cost of living has expanded so rapidly and so much. If you never got a raise and were just paid in 271 ounces of gold, that equates out to somewhere $600,000-$700,000. You would have sustained your standard.
Good evening, everyone. This is Eric with a critical update on the global financial landscape, focusing on a potential game changer in precious metals that could drastically affect your investments. Andy Schectman and Lynette Zang delve into an urgent and potentially groundbreaking scenario involving the BRICS nations: Brazil, Russia, India, China, and South Africa. They discuss how these countries may be secretly planning to revalue silver, possibly pushing its price to $500 per ounce. This revaluation could signify a significant shift in global economic power, challenging the dominance of fiat currencies and the US dollar. The video scrutinizes the current financial system's weaknesses and how physical assets like gold and silver might offer a hedge against economic instability. Schectman and Zang argue that the BRICS nations are strategically positioning themselves to benefit from the revaluation of precious metals. They explore how the depletion of silver and gold reserves, coupled with Eastern nations' aggressive acquisitions, might indicate an impending major financial shift. The video begins with a stark assessment of the financial system's decline, reflecting on the 2008 crisis. Lynette Zang points out that Bitcoin's emergence around the same time might have diverted attention from gold and silver, drawing investment into a new asset class, and potentially delaying a move towards these traditional stores of value. Andy Schectman emphasizes the inherent vulnerabilities of fiat currencies compared to gold and silver. He argues that while fiat money and paper assets are susceptible to economic fluctuations, physical metals offer stability and broad utility across sectors, making them superior in times of financial distress. The discussion shifts
6,000 ounces a day at current prices. It's a 600% increase in what they were doing. And when you put that in context to what we are seeing coming off of the exchanges, to me, it's part and parcel with what I've been screaming over and over and over again. Yeah, I say the same stuff. I do. But it keeps happening, and it keeps happening, and it keeps happening. And if you don't pay attention, you miss it. The recent data as of August 31st shows us that when you talk about the amount of silver that's been taken off, just the LBMA, in the last month from July 31st to August 31st, July 31st, they call it the float in London. There's 800 million ounces of silver in London on the LBMA. 500 million belong to the ETF. So the float, the 300 million, are the ounces that are available to be delivered that back the bars. So when we talk about the float, at the end, the last day of July in 2024, that float was 336 million ounces of silver, or 10,440 tons. At the end of August 31st, 1 month later, it's 309 million, or 9,599 tons. In other words, 27 million ounces, or 8.1% of all the silver in the London vaults was drawn down in 1 month, in the month of August. And so when you talk about how fast this is happening, it's ridiculous. And then you look at COMEX, and since November 2020, when I started on talking about this with you, that's about when I started talking about all the deliveries coming off of COMEX. That had never happened before. Never. We've seen in gold, 2,136 tons of gold have stood for delivery, and 24,072 tons of silver have stood for delivery. And I remember I said that just in terms of the amount of 336 million ounces is 10,440 tons. Well, since November of 2020, we have seen this massive amount of 24,000 tons taken off. So you're talking, almost what are we talking? 800 million ounces. That's almost the exact amount that India has imported in the last 3 years. And so this is something that should not be overlooked or taken lightly. That doesn't even take into account those numbers off of COMEX, the exchange for physical, which we've talked about, where massive amounts of gold and silver are purchased in the West and delivered in other parts of the world, usually London, but there is that little known contract that was developed in 2015 that allows metal to be delivered to BRICS Hong Kong, which is a COMEX facility, which then it's usually in the kilo bars, the mini contract on COMEX, or the mini kilo bars. Well, that's what's traded on the Shanghai Metals Exchange. So they can buy and stand for delivery on the mini contract and send it to BRICS Hong Kong, where then who knows where it goes, probably gets trucked over to the Shanghai Exchange, which deals in kilo bars. The point of it is that all of these countries understand what is happening, and they understand that the suppression of the Western market is it's how they win the game. And they're just flaunting it right in our face, not only by taking delivery, but saying, yeah, we're going to buy 36,000 ounces a day for the next month. This is what they're doing. They're using the suppression of the Western paper market against us. I've been saying that forever, and they are draining the exchanges. And I want to read something to you that I came across yesterday, and it's close to what we're talking about here, but I think it's really, really, really important for people to hear this. Let me just find it real quick, because I don't know, it blew me away when I read it. And you know how there's been all of this talk about revaluing gold? We've talked about Cynthia Loomis, the senator from Wyoming, who talked about revaluing gold in order to partially pay for the Bitcoin strategic account that Trump wanted to build. We've talked about the gentleman, the head of the central bank of the Dutch central bank, who says we should revalue the price of gold to get our balance sheet in order, more or less. So, there's a lot more to that than meets the eye. And I wanted to read this to you so people can understand just how
to the role of governments and central banks in manipulating the financial system. Schectman and Zang criticize these institutions for prioritizing their interests over the welfare of individuals, pointing out how excessive taxation and corporate influence have undermined the original constitutional principles designed to protect citizens. The video highlights the impact of inflation since the US abandoned the gold standard in 1971. Zang contrasts the steady value of gold with the eroding purchasing power of fiat currency, illustrating how holding gold would have been more beneficial over time. Schectman provides alarming data on the rapid depletion of silver and gold reserves, particularly in Western markets. This trend, coupled with Eastern nations' extensive acquisitions, suggests that significant financial shifts are on the horizon. The depletion of these reserves might be a precursor to a larger strategic move by BRICS nations. The BRICS strategy. A key focus of the video is the potential revaluation of gold and silver by BRICS nations. Schectman and Zang speculate that these countries are accumulating gold to support a new financial system that could challenge the US dollar's supremacy. Historical references are made to US efforts to control gold's role in the financial system, implying that BRICS' actions could be part of a broader strategy to shift financial power. Conclusion. The video concludes with a stark warning about the unsustainable nature of the current fiat-based financial system. Schectman and Zang advise viewers to consider diversifying into physical gold and silver as a safeguard against potential economic upheaval. The anticipated revaluation of these metals could lead to substantial gains for those prepared for this shift.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Never say that those assets are Treasury bonds. They can't sell them, Chris, because from convexity, it would force a snowball effect and a bond default. The big banks are loading up in gold. I did a consult call with a fund manager a few months ago. He said, Jim, every Wall Street bank has gold and they're doubling their gold. Every Wall Street bank has gold and they're doubling their gold. The depression means they need to cut rates. The inflation means they need to raise rates. You cannot sell a bond with rates going down when inflation is going up. You can't do it. They don't show up. And you know, we're handing money under the table, Chris, to England.
The BRICS nations are expected to continue raising interest rates due to excessive debt levels. Jim Willie predicts a financial crisis by June or July before the November elections, largely driven by a bond crisis. This potential crisis emphasizes the need for careful financial strategies and highlights ongoing concerns about the U.S. economic situation. In a recent discussion, Jim Willie shared insights on economic conditions, emphasizing the significance of gold accumulation by central banks. He predicts that the rising demand for gold will continue to drive its price upward. Despite challenges, Willie remains hopeful about restoring economic stability and returning to a gold standard. He stresses the importance of addressing societal and economic issues, advocating for a return to traditional values and a focus on economic growth through innovative technologies like Tesla patents for energy production. Willie also touched on the broader societal impact, expressing hope for a cultural shift back to fundamental values. He emphasizes the role of divine intervention in overcoming challenges and highlights his personal experiences of protection and guidance through faith. He calls for the exposure of negative influences within the country and a renewed commitment to traditional values and divine guidance.
To Belgium and to Ireland, we're handing money under the table for them to show up and buy our bonds. And it's not showing up on the tick report because they're giving it right back under the table and it's going to the Fed balance sheet. Before I get to my list, I'm going to talk to you briefly about what I call foreigners are selling Treasury bonds at a record rate. We've got a tremendous amount of supply of bonds. The Department of Treasury is obligated to buy back the bonds. And the Fed is where they put the bonds. So how's the Fed reducing their balance sheet? They're not. They're lying. Or we're tapping the Exchange Stabilization Fund. And let's just leave that for a future date to discuss. Foreigners are selling a huge amount of treasuries. The government's got to buy it, the Treasury Department. They put it on the Fed balance sheet. We got a tremendous amount of bond supply to sell. They're unsuccessful auctions, which means we put a lot on the balance sheet.
Freedom of Information Act. It was a staff meeting, and it was between Thomas Enders, who is the Assistant Secretary of State for Economic and Business Affairs in 1974 under Nixon, and Secretary of State Henry Kissinger, who of course, we know had just gotten back at this point from striking a deal with the Saudis. So this is right after we are now the petrodollar. And this is the meeting that now we see through the Freedom of Information Act, the transcript. So let me just read this to you. It's about 4 paragraphs. But I want you to keep this in mind as we talk about the potential for them revaluing the price of gold and why all of these countries are massively buying it, okay? So this is 1974. America's objective, the official transcript of the meeting quotes Enders as saying, was to move towards a demonetization of gold to begin to get gold moving out of the system. Kissinger asks, why is it against our interest to have gold in the system? Enders replies, it's against our interest to have gold in the system because for it to remain there, it would result in being revalued periodically. Although we still have substantial gold holdings, a larger part of the official gold in the world is concentrated in Western Europe. Well, now it's concentrated in the East. Anyways, he says this gives them the dominant position in world reserves and the dominant means of creating reserves. We've been trying to get away from that into a system which we can control. Kissinger says, but that's a balance of payments problem. Here's the cool part. Yes, but it's a question of who has the most leverage internationally, Enders answered. If they have the reserve creating instrument by having the largest amount of gold and the ability to change its price periodically, they have a position relative to ours of considerable power. All right. So now we talk about gold in the unit and gold being used to back a new system. And who's buying all the gold? Oh, yeah, it's the central banks, more so than in any time in history. And what is gold? We know it's the only other tier 1 reserve asset. And what are they doing? They're all repatriating it and bringing it home. And what's happened in China over the last 6 months? Well, they've pushed silver $4 an ounce higher than it is quoted in the West. So isn't that really the price? So if you are a sophisticated trader or an idiot trader on Goldman Sachs or JP Morgan, well, you got 50 million ounces, you can sell at a $4 premium. You just cleaned house. You just made $200 million. So you're happy about that, but that 50 million ounces, that ain't ever coming back. Never, never, ever. And so the point is that is the price. So when you talk about they knew this in 1974, and gold is held on every central bank balance sheet in the revaluation account. And Enders was telling Kissinger, we can't let them have the gold. They can revalue it. Well, what if that's the ultimate plan of the BRICS nations? What if they're the ones buying all of the gold, not really telling us how much they have been buying? What if Russia's been buying that much under the table for a long time? They're not telling us how much they produce at all, nor is China. The IMF said China has way more gold than they tell us. Your buddy Alistair, who I think is one of the smartest guys in the world, says they have 40,000 metric tons. Not the 2,700 metric tons that they tell us that they have. And the head of the IMF said they got way more. The lead analyst for Bank of Montreal says they have. Well, what if all of these countries ultimately plan to revalue gold? Just